This is The Point, news from Noise, daily market call presented by Kattan Ferretti Financial. I'm your CEO, Brad Roth, and I look forward to having a daily discussion with you over the topics that we present in this note every single morning. So without further ado, The Point. All right, good morning. Welcome to The Point. Cameron, why don't you hit us off early with the news?
U.S. markets futures are mixed this morning, with the Dow and S&P seeing minor gains as the Nasdaq takes a small dip after yesterday's gain of almost 1.5%. The U.S. dollar took a small step back against major currencies, and yields on 10-year treasuries held mostly flat at 2.24%, while gold realized a small dip. Oil continues its recent advance, moving up 0.6% to nearly $45 a barrel as government data showed a drop in U.S. supply. Banks are showing plans to boost dividends and for stock buybacks more than analysts projected after every lender passed its annual stress test. Capital One, however, must resubmit its capital plan. GDP data and jobless claims are to be reported this morning, both at 8:30. Not much is to be expected changed, even though jobless claims are at historic lows. A busy week of Fed speakers continues today with James Bullard at 1 p.m. Topics will include the economy and monetary policy, as Bullard is one of the few who suggest no more rate hikes this year. Walgreens and Nike lead today's earnings reports, with information coming out before and after market hours, respectively. Nike co-founder Phil Knight said yesterday that not even Tiger Woods could make golf profitable for them, as they recently pulled out of the golf equipment industry. And Trump's travel ban restriction will begin tonight at 8 p.m., blocking refugees and immigrants from 6 countries. Outside the United States, the euro continued its climb, rising to its highest level in more than a year, while the British pound realized its 7th consecutive day of gains as expectations rise on the tightening of financial conditions as economic growth continues. Today at the UK, House of Commons will vote on Theresa May's government program as the Labour opposition attempts to add elements of its manifesto into her plan. The Stoxx Europe 600 index fell 0.3%, led by a drop in utilities as banks kept the loss minimal, gaining 1.5%. Britain's index realized a small gain, while Germany, France, and Spain all ended up in the red. Britain was warned they must act fast to protect EU workers inside the country, as they will be an important source of labor in the coming years. All this after it was recently reported about half of them were going to leave for work in other countries. Japan and China are still waiting for major reports on data due this Friday, as China awaits reports on government offers to cut overcapacity and leverage, while Japan sees a plethora of economic data coming from several different sectors. The Chinese yuan strengthened for a third day, while the indexes of Hong Kong and Shanghai both saw solid gains. Elsewhere, Australia's S&P ASX 200 index rose a little over 1% thanks to banks and basic materials, while South Korea also advanced, seeing a new record. Goldman Sachs has downgraded its forecast for oil prices over the next quarter amid a sudden rise in shale drilling and an unexpected surge in production for Libya and Nigeria. Their new estimate comes in at $47.50 per barrel compared to their previous estimate of $55. And lastly, global debt has hit a record high in the first quarter of this year, mainly due to emerging markets, raising questions over yet another bear market. Emerging markets gained almost $1 trillion in debt in the first quarter this year, with Brazil and India leading the way. So, Brad, what are your expectations here for these GDP reports and jobless claims?
Yeah, well, we've been keeping kind of a close eye on GDP, as well as not just jobless claims, but also the employment numbers. GDP, we don't expect to see much change here. I don't think that enough has been done and enough has improved in the numbers to see a big jump in growth. I don't think there's been much done on infrastructure. Nothing's done on taxes, and I think that could have been some catalyst for some jumps in GDP. So I don't think this number is going to change anything today coming out at 8:30. What we noted yesterday in our discussion was that we were kind of at the higher end of a risk level, but hadn't seen anything to tell us that it was time to pull the trigger or put on any sort of hedges. But, you know, as we talked about, the Fed speakers were out in a bunch yesterday, and the EU bank presidents were there to we had a buoy and save the day, but we got James Bullard here in the U.S. talking and at 1 o'clock, and I think he's your market mover. The one thing that I noticed that you said there, Cameron, last was global debt has hit a record high in the first quarter of this year. Nothing to be concerned about yet, but there's got to be some point where we put a damper on just borrowing. And I think one day that's going to come up, not on our U.S. soil, but again, internationally, where I think that's where those problems are going to arise, like we are keeping an eye on EU banking, like we had said yesterday. So, Cam, again, slow day in sports. So you have one more. It's still golf week, huh?
Yeah, just continuing a week of golf tips. There's nothing I want to dive into because it'll take me a couple hours to explain. Probably gets really technical, but I think it's something you should definitely check out on the note here or on the Facebook page. It's very interesting. I think I think it's contrary to popular belief. A lot of people hit a fade or a draw, and whatever they think happened at Impact really is probably the opposite of what actually happened. And I think it's really interesting and something people should check out. So next time they hit a wayward shot, they'll know what happened, and they'll be like, why I didn't know that was the cause of that. So maybe they can get themselves on a better path. So yeah. I definitely recommend read into it.
I will definitely be reading that this morning. And let's end the show a little bit differently. We've added to the note the quote of the day. So I'm going to read that for you. The individual investor should act consistently as an investor and not as a speculator. That comes from Ben Graham, legendary investor. So, Cameron, that is the point for Thursday, June 29th. We'll see y'all tomorrow.